Hi, a very good afternoon to all of you. My name is Mark, and here to give a commentary on the markets itself. Okay, so this is a chart of S&P 500, and like I said, long time before, if you look at the 50-day moving average, which you can see here is actually the green line, it's still in an upward trajectory, and hence we have to say that the market is still considered bullish lah, even till now. All right, as I repeated before, doesn't mean that it is in the uptrend. It doesn't mean that the price cannot pull back, uh, you know, significantly. But we want to place trades in the long side lah, as of now, because um, there were a lot of bad news around this certain region over here. But it seems that the market has struck off all these issues and have been consistently moving up still lah. Okay, and let's just look at some of the stocks that I am trading. All right, the first one is NOV. All right, as a lot of you know, I am a big fan of this stock because I think fundamentally it is a fantastic stock and it's pretty safe stock to trade. Okay, so the buy was around 72, 79, and even till now, I'm actually still in the stock. I have left a very small position, and as it's broken out of this trend line, I'm actually out of most of my positions really because I think it is quite a sizable move lah, from 73 to about $82 and change. So these are some of the, this is one of the stocks that I'm still holding. And of course, GE, which I posted, I think, about a month back, and I'm still in the trade. You can see that the buy was around here, around the low here, which was, I think, was pretty lucky because we won't know where the market will go lah. So based on this trend line, you can see it's a very well defined trend line. All right, and a very sizable pullback to the 786, which is where I like to take my trades. Plus, you got support and resistance zones, this red area, and a volume support zone around these green areas, which makes this a high probability trade. Some of you already may know how to do this, especially my students. So buying around here with a stop below the 100% is usually how I trade it, and I usually take my risk off pretty fast, and as in I take about 3 positions and I peel off my positions one by one, which is the standard way I trade to protect myself. And around this difficult period, most people would actually, you can see it's chopping around and going sideways. Most people would actually, tend to get out of that position a little bit prematurely lah. So it pays to have some sort of rules, some order to the way you trade, even though it may be discretionary in a sense that whether you actually enter the trade or not. But in terms of entering and exiting, it pays to have some rules involved to protect yourself, because most of the time we think we're very smart, but the market actually don't really care whether we think we're smart or not. And you don't want to be trapped on the wrong side of the market. So it pays to have some rules to actually get you out of the position quickly. And once you take off your risk pretty early, you will have the conviction to actually hold on to the trade a little bit more because you're not so stressed anymore lah. Whereas if you have a very big position, at maybe 24, 25, you may be making a lot of money, but chances are in the middle here, you may panic and exit. So trading is actually easy, but psychologically very difficult to do. There's no need for dozens of indicators and stuff like that, but you, however, need the discipline in terms of execution and exiting your position. Okay, so even though it chopped around, GE has been doing pretty well. All right, even after releasing earnings, it has popped up and gapped up around 26.50 to 26.60. So I'm still in the trade with one of my smaller positions left, and hopefully it can continue to run. And in this case, probably we will see whether it can bounce off this top resistance area and continue to go up. Okay, if not, I will have some rules to actually protect myself as I've moved my stop loss up a few times already. Another phenomenal trade is Intel, which I taught, I think, 2 weeks or last week. Okay, you can see that along this channel, it hasn't broken out yet. I'm hoping that it can break the resistance level here. But after entering around this 24.65 with a stop below here, the initial stop, my stop has actually been moved up pretty much already. Let's take a look where my stop is. So my current stop now is actually below this candle, which is 25.50 lah. Alright, so I made most of my positions, first two positions, and I've trailed my last remaining position up to here. And I think it is important to understand that you need to have the skill of placing stop losses also, because you don't want to cap your profits, you see, because most people like to like Colin says, right? Most people like to buy and then sell quickly, and whatever profit they have, they will actually exit quickly. And when you lose, right, you tend to hold on to your positions, which is in a trading sense not very ideal. Maybe from an investing point of view, and is provided that you are very sure that it is a good stock and it can turn around, then it could be a viable strategy in terms of averaging down lah. But in terms of trading, you should never average down, because even if it works 9 out of 10 times, the one time that it doesn't work can actually wipe your entire profits out in terms of trading. So you must have a very clear distinction of what you're actually doing, especially when you're trading, because it is an entirely different ball game lah when you're trading and investing. So sometimes if I feel the market is a little bit overheated, then I may choose to trade a little bit more. And if I feel that there's some good valuations in the market, then I'll proceed to actually enter some investment positions. So I do have separate accounts for this to actually, psychologically you must prime yourself to to segregate them, because sometimes your trading can become investments and investments become trading, which is not a really good way to do things and go about things lah. Yeah. So in this case, Intel, I'm still in a position until it breaks down of this trend line, and in this case, I'll probably adjust with this wick here, and hopefully it can it can break through, and I will get the dividends here, which is about 5th of May, the 0.225. If it doesn't correct too much, I think I should be able to hit the dividend on the 5th of May. All right, for this. So this is a very good trade. You can see that my trades are not very frequent. Sometimes I wait 1 month and 1.5 months for a particular trade, but this is what I'm comfortable with lah. I've been trading for this, in this manner for many years, and I'm very comfortable with where my age is and where I'm going to enter. And a quote from a very good Citigroup a prop trader actually told me that not having a position is also a position, because if you were to enter positions based on you feel like or you want to put on a position and the risk and reward may not be there, then it's much worse than having no position, because a lot of people have this conception that traders must actually put in a lot of trades in order to look like a trader lah, or seem like a trader, and then that's not the case lah. You must know where your sweet spot is in terms of your confidence, and only enter when you feel the odds are right lah. Sort of like like the lion pouncing on a particular zebra or something like that. Okay, usually you look for the weak ones and then you chase after them. So you do need to stop and wait for your prey, and this is something that is quite unique in the market, I would say, because there's plenty of opportunities every day. But however, if you know where you are likely to do well and do better, then your chances of making the trade a success is actually much higher. That's what I would think so. Okay, and another one I talk about is Goldman Sachs. I think Goldman Sachs, I did say that if it comes down to here and it turns, I'm likely to buy it, but it seems that there are actually better opportunities in the market now. So even though it has turned, I'm not entered a buy position on Goldman Sachs. But however, if you did buy on the 786, you should have some profits here lah, because you can see this Fibonacci retracement. Okay, there's a very nice pattern here, and if you bought on the 786 or the 886, you would have made some profits now. But I think generally it is a good stock, and Buffett's average price was about 152, 153. So if you had gotten around the same price as him, I think you will be doing pretty well as an investment position. Okay, but for trading purposes, I think there could be better candidates. I don't know, I may be wrong. All right, but I think this stock usually doesn't do well when it's closer to May, and it starts to bottom out maybe around August or September. But we will see how it goes lah. So another one is IBM, which I've exited most of my position because there's sort of like a one-to-one move here. I think something wrong with my tool, but you can see there's one move here and there's another move here. So it's like a one-to-one move. So therefore I exited at this very well-defined trend line. All right, another thing I can give you guys is that you must learn to draw trend lines because it has been an indispensable tool to me after I mastered it. When you first start out drawing all these things, you may have difficulty lah. So, but don't be too discouraged. All right, try your best to uh, don't give up lah. Just try your best to draw as many lines as possible. And after a while, maybe a few years, you realize that you see things in the market that that pops out at you using trend lines that can serve you very well, right? In terms of like even like Goldman Sachs, you can see Goldman Sachs here. Okay, you can see Goldman Sachs here. If you had draw a trend line here, which I've done so, all right. And it breaks out, you could have exited here, or in this case for me, I exited right at this point. Of course, I didn't get a high, but I exited at this point due to a trend line that I have drawn earlier. Okay, right over here, this point, and this point. So even though it has broken out, some people may redraw the trend line, but I know that this, with experience, you know that actually this could be a one-time event, and the stock could actually, if you retain this line, right, the stock could actually go back up and touch this line and then reject prices from this area also. So it takes a little bit of experience, and I encourage all of you to learn to draw trend lines because even though moving averages help you on a visual basis, right, I think trend lines are the one that actually can help you a lot in your trading endeavors lah. All right, so another stock that I've traded is Wynn. Okay, Wynn Resorts, not Wynn the casino, but Wynn Resorts. It's called Wyndham worldwide. It's a hotel chain that and resort chain that I think has been doing very well. In terms of valuation, I think it's worth about $90 to $100 lah. All right, so you can see that the basis of this trade is very simple. You have an impulse move up, and then a very nice controlled selling pattern here, and it hits the 786 right over here, $70.01. That's where you enter, put a stop below the 100%. Right, the basis of this trade is because there's you can see previous support over here. All right, support over here also. So this area is usually an area where it turns lah, based on the past price action, and coupled with the fact that you have this green zone over here, which is very heavy volume support lah, support and demand lah, from the volume action itself. And this is what I teach in my course lah, for many batches now. So the basis is very simple. Enter at 70.01, put a stop below the 68.31, slightly below, not exactly at that point, because you don't want it to hit support and bounce off immediately. All right, and then you manage your position straight away. Okay, so I did exit two of my positions already. I'm riding on the last one, so I have no stress with this trade because I've already made two positions and I put it at break even already. And so we will see whether it can continue to break this trend line and move up even more, maybe possibly to the $76.27, which is the all-time high lah, around here. Okay, and some possible opportunities that I'm looking at will be UNH. Okay, UNH is healthcare, and I think it's a pretty good stock lah. In terms of valuation, I think it's close to 100 plus, at least about $100 to $120. Take note that even though valuation work tells you how much the stock is roughly worth, doesn't mean that the overall market cannot correct. So from a trading point of view, it's fine because you have your stop losses in place for this. All right, but I like to know what the stock is worth before I trade it, even on a short-term basis, because I don't want to buy something that is manipulated, or penny stocks, like all these kind of things. I'm definitely not interested in, because remember, what is important is you want to avoid permanent loss of capital, which is a very important thing. Because let's face it, if you lose 90% in one stock, all right, you need 1,000% to actually make up to break even, which is I feel quite ridiculous lah. So if that's the case, why would you want to buy something that could just get down 50% or 70%? For me, it just doesn't make sense lah. Obviously, you can punt on it, but from a trading point of view, I would rather prefer consistency lah and safety rather than something that could be like a sharp bite or a disastrous result lah. Okay, so I think UNH is also pretty good. I have not bought it yet. I'm waiting to see if it will turn up slightly, because it just had earnings right over here, right, about 2 days ago, 2 to 3 days ago. And I think this is a pretty good stock. We will see whether it can turn. Once it turns, I'll definitely be entering a position once it starts turning. If it starts drifting down and continue, then we will still wait and see whether there's a short-term momentum turn before I enter a position on this. Okay, another stock that I entered was Dollar General. All right, this is a very simple play. All right, it's just a support and resistance play. You can see this red zone is actually previous a demand zone, a natural support and resistance, and it had a false break over here. Okay, this was the support area, and it broke down and it popped up again. So it looks like there could be a up move here. We don't know. All right, but my stop is slightly below this area, which is about slightly less than 53 lah. But my entry was 55, 30, 34, right? So I'm losing about $1 now, I think. I mean, as in monetary terms, it's not a very big position for Dollar General. All right, in terms of the Singapore market, you know that I rarely trade the Singapore market because I think volatility is not very strong over here. But just based on the STI commentary itself, you can see that the 50-day moving average is actually pointing upwards, right? Remember I said that since it's pointing upwards, you should be looking at the potential of a long trade lah. Okay, but it seems that it has also made a one-to-one move, so I'm not sure whether it can sustain this up move lah. But we just give the benefit of the doubt to the bulls at the current moment of time. Okay, the only one I have, like I said many times before, is KEPCORP. I have bought it through what's this? Let me draw my tips here. Okay, I bought at this 786 because there was a previous trend line support. Okay, let me just draw a very simple trend line support here. Okay, so the entry was 786, put a stop below 100, and then managed the position accordingly. So I exited most of my position around the 1060, 1070 region, and I wrote my last position up here. And since I have my last position and it has going to XD, right? You can see the XD actually corrected a lot. But I'm very comfortable to get the dividend because my last position has not much stress left, and I'm quite sure that it will not go all the way down after XT, maybe to below 1030 lah. Of course, it's a bet lah, but I'm happy with the dividends that I've received. So I think that's about it. My next course will be actually with CyberCode. All right, this may be the last time I'm holding this course with CyberCode. I'm not sure yet, but chances are it's going to be the last one. And it's actually on the 10th of May on a Saturday. It will be from 10 a.m. to about 5 p.m. But usually it stretches to 6 plus because there usually will be a lot of questions and stuff like that. So if you're interested, right, you can just call this number, all right, and inquire about this. Unfortunately, I cannot collect payment for this. This is under CyberCode, so you need to make payment to CyberCode if you're interested lah. The price will be about, I think, 788 for members lah. And if you like to know more about the curriculum, you can go to STI.SG.com. Okay, if you like to subscribe to our newsletter, you can just put in your name and email, and any video updates we'll actually send it to your inbox lah. Right now, I have some issue with Aweber, so once I fix it, everything should be smooth. And if you'd like to know more about the program, just click on the program tab, and you can see the outline, and you can see some testimonials. And for the full curriculum details, you can just click here for the PDF. All right, and it will show you exactly what will you get lah. from the course itself. And I strongly encourage all of you to attend if you're interested, because I think it's value for money, and it's something that I wish that I had when I was starting out when I was trading itself many years ago lah. I think it's something that can shorten your learning curve and give you very precise entries and exits, and also stop losses. And at the same time, what are the stocks that you should be looking at, rather than playing all the stocks that you have in the market, which is very confusing, and how to actually stack probabilities in your favor. So I think that's it. Next week, if I see anything interesting, definitely I'll post a video on the market itself and my positions. And in the meantime, all of you trade safe and stay healthy.